start.
Sir, excuse me, sir. Sir, I have presentation as I told you, sir. Can be present like,
Okay, just let me open. I'm not able to see you at the moment. Yeah, please show the presentations. So what you are saying?
sir, I have presentation as at 12:30, sir. So can
Okay,
be
so you
present.
can just be the first one to present if you want. Otherwise, you can present. So what do you want to do? You want to present now?
Yes, sir.
Okay, do go ahead, please.
Power.
So कितने लोग हैं आपके ग्रुप में?
So four.
Four. Okay. So what topic you have chosen?
So oil and gas industries.
Oil and gas. Okay.
Power.
Please go ahead. It's getting recorded also. If I'm just for a while, I'm just taking a 10 seconds break. Okay, I'm just coming. You can start. Yeah, I'm back. So please go ahead. Sorry for the. Who is presenting?
Yes, sir. Yes, sir.
Yes,
Pawan.
Suranj. Okay.
Hello. Yeah. Am I audible, sir?
Yeah, you're audible. Please start. Are you presenting?
Yes, sir. Yes. So I was asking, am I audible, sir?
Yeah, you're audible now.
Yes. So the sir, we have chosen India's oil and gas industries. So we are group five, and our members are Pankaj, Pawan, me, Suryans, and Rohan. So this presentation provides an in-depth analysis of India's oil and gas industries, focusing on growth of so this of
Is there any problem there, technical
Yeah,
glitch?
so there's some problem like with the slides, like if this presentation provides an in-depth analysis of India's oil and gas industries. We will be focusing on growth trends, market share, distribution, structure, efficiency, profitability, valuation, and future outlook. We will examine the major players like Reliance, ONGC, IOCL, BPCL, HPCL, MRPL, and CPCL. We will be comparing their performances across different financial and potential metrics. Uh, we will finally conclude the presentation with recommendation based on our industry insights. Pawan, can you change the slide? Next slide. Yeah. Focusing on the growth outlook, India's oil and gas sector is experiencing steady growth due to urbanization, industrial expansion, and rising transportation demands. Government policies encouraging natural gases and clean fuels are also shaping a long-term sustainable trajectory. The industry is projected to grow from USD $710 billion in 2024 to USD 1.164 billion 2033, reflecting a CAGR of 5.23% from 2025 to 2033. This indicates that energy demand will keep rising, supported by both consumption growth and clean energy initiatives. Pawan, can you change the slide? Yes, market it. So the Indian oil and gas market is dominated by three key players. The first is Reliance, which has acquired 27.5% of market share. It is a leading with integrated operations and strong private presence. It is followed by ONGC, 21%. It's a upstream giant with stable reserves and government backing. Then comes IOCL with 19%. It is a largest public downstream player. The rest of the markets is being shared by BPCL, HPCL, MRPL, CPCL, and smaller refineries. This distribution highlights the dominance of a few large companies, while small players struggle to capture significant share. So on to Rohan.
All right, so I'll be taking on the presentation now.
Okay.
So right now we'll cover the cost structure of the oil and gas industry. So as you can clearly see that refining and processing is the largest cost driver. And before this, I would also like to highlight that the Indian oil industry is primarily a refining hub, and we are not basically a upstream giant or anything. And another thing to point out is that the oil and gas industry in itself is highly capital intensive, which is why we see processes like refining and drilling extraction being major chunks of cost.
Okay.
So the
When you say
highest cost
upstream
is
and
covered by
downstream,
refining and
sorry.
processing, which is around 20-22%,
Okay.
followed
So,
closely by
Rohan,
regulatory.
so what I
Sorry,
was
sir.
saying was that, you're talking about upstream and downstream. So basically, which are the companies which are in the downstream or upstream, mainly?
Sir, mainly upstream में sir Reliance, ONGC and IOCL are
Okay,
there.
just a sec. I'm getting a call somewhere. Hello. Ah,
Sorry, sir.
yeah, yeah. Please go ahead.
Yes, sir. So as I was saying, regulatory royalties and marketing also cover up around 18 to 20%, which basically covers taxes and compliance. Then we have slightly smaller expenses like drilling, extraction, exploration, and transportation plus distribution, which takes up around 10 to 15%. And then followed by slightly smaller expenses like employees, administration, and miscellaneous. So we can also like say that the total cost production per barrel is around 50 to 70 per barrel, which comes out to around zero point 0.3 to 0.54 per liter. Next slide, please. Right, sir. So this slide basically covers the enterprise value per tonnage analysis.
Okay.
So this slide is really about how the market perceives the different players and how shareholders are attracted to different firms. So as we can clearly see that Reliance commands the highest EV per ton, not only because it produces the most, but also because it integrates a lot of things like exploration, refining, petrochemicals, and even retail. So obviously that like attracts a lot of confidence from the shareholders and investors. Then we have the PSUs like ONGC and HPCL, which sit a little lower. And ONGC is primarily upstream, exposed to commodity cycles, so its valuation does not get the same premium. HPCL is more downstream focused but doesn't have the diversification edge. Then Bharat Petroleum and Indian Oil are in the middle. They are strong players, but still largely state owned, which caps their investor enthusiasm. And then lastly, we have Chennai Petroleum and Mangalore refineries, which are regional players and as a result do not command a lot of shareholders at the national level. Next slide, please.
So
Uh,
coming to this slide, efficiency analysis through the DuPont analysis. So in this oil and gas industry, we can see Reliance has the highest net profit margin, and we can see the effective use of assets. On the other hand, like ONGC also shows a moderate return on equity because of stable profits. Following them, companies like IOCL, BPCL, and HPCL, they also display efficient use of assets, but points to a steady and less remarkable performance in profit margin compared to the industry leaders like Reliance and ONGC.
Hello.
However, the situation is like different for
हाँ बोलिए.
MRPL and CPCL, which report a negative ROE mainly because of ongoing losses. Overall, the industry average reflects moderate profitability, which is quite typical for the capital intensive sector like this. If we look a closer look, that reveals that a company's ROE is shaped by more than just profits. For instance, HPCL, MRPL, and CPCL show the highest asset turnover rates, meaning they are very efficient at using their assets to generate revenue. In addition, HPCL and IOCL use more borrowed money or leverage, which can magnify shareholder returns but also add risk. As a result, the ROE for companies like BPCL and HPCL is high, maybe because of their shareholders' equity is very less in comparison to the Reliance and ONGC. Taken together, this explains why there is such a significant variation across the industry. The average ROE is around 14.4%, but each company arrives at its results through a different balance of profit margins, operational efficiency, and finance structure. So next slide. So this is the net income, like how uh, each company has performed in India's oil and gas industry. Reliance Industry has the highest net income of about 94,647 crore, uh, which is highest among its competitors. ONGC follows second place. IOCL and BPCL contribute more moderate profitability or, or net income, showing consistent performance in the downstream segment. HPCL reports a smaller gains like of 10,213 crores, very relatively lower net income compared to
आपका
its
ग्रुप नंबर
peers.
कौन सा है?
So group number five.
एंड पीछे वाला जो था वो 4 था, अभी 6 वाला ग्रुप है कोई इसके आगे ग्रुप जो प्रेजेंट करेगा आज? दो ही लोग हैं या दो ग्रुप ही हैं? इज इट?
I
नो
think so.
सर, वी आर देयर टू प्रेजेंट। हम ग्रुप 4 थे, इससे पहले वाला ग्रुप 6 था।
अच्छा, तो ग्रुप 4 वाला प्रेजेंट करेगा, उसमें कौन कौन है?
अश्विन, शिवम, तेजस एंड साम्या।
ओके, सो यू हैव टू प्रेजेंट आफ्टर दिस. ओके,
यस सर।
सो आप कुछ टाइम बता सकते हो कितने बजे करना चाहते हो? अभी करना चाहते हो इसके बाद या थोड़ा
हाँ
टाइम?
सर, अभी कर लेंगे इसके बाद।
अच्छा अच्छा, ठीक है, ओके.
So
तो मैं
MRPL and CPCL shows net losses
indicating operational or marketing challenges. But despite these weaker players, the industry average remains positive, around 25,524 crores, largely because the strong results of Reliance and ONGC, which offsets the losses of smaller firms. Next slide.
All right, sir. So now we'll be covering some of the valuation metrics that we've taken up,
Okay.
and also some of the key insights that we picked up from these. So as you can clearly see, Reliance again stands out with high price by earnings, high EV by EBIT, strong EPS growth. So the market sees it as a growth engine and not just a oil company because it has
आपके
diversified.
कितने लोग हैं आपके ग्रुप में? 3 है ना?
So four people.
Four
So
people.
Suryansh has already presented. आप जो है Rohan, you are coming again,
Yes,
and
sir.
Pankaj has done. Who is the fourth one?
The
Pawan.
Pawan.
Pawan. Pawan, आपने present कर लिया कुछ?
No, sir, I will be doing it.
अच्छा, ठीक है,
So,
चलो.
so he'll be doing the recommendation and conclusion.
Okay, Rohan, just continue.
Right. So as I was talking about Reliance, it is a very strong market player, and that is not just because it's an oil company. It's also diversified into refining, petrochemicals, and even retail. Then we have ONGC, BPCL, and other PSUs, which trade at lower multiples because they're more tied up to the crude prices and government interventions. And again, they are not as diverse as Reliance. And then at
आपने
the
इसकी
very
P
end, we
रेशो
have,
दिखाई है Reliance की 17.71, isn't it?
sorry, sir.
The P ratio of Reliance
Anji,
is
sir.
17.71, isn't it?
Yes, sir.
Just check it. According to me, it should be above 24 or something. Okay.
Uh, so this was latest data, I think, sir. So I will check it once if you like.
Just check later on. कोई बात नहीं. Continue, please.
Okay, sure, sir. Right, sir. So at the very end, we have MRPL and CPCL, which are low in their ratios because they are regional players and they don't have that much shareholder confidence.
नहीं मेरे
But
को बताओ रोहन,
if
चलो
we,
आपका assuming that Reliance is 17.71, but it is having the highest P ratio compared to all others. So what is the reason behind it? What is your
yes, sir.
analysis?
So from what I spoke and whatever I researched, they are obviously they command a lot of shareholder confidence, but they also have diversified into like refining and petrochemicals.
Hmm.
That could be a major reason, sir.
भाई petrochemical और refining तो दिन core business रहे हैं. They refined into many other businesses, like retail and telecom.
Yes, sir. Telecom and retail as well, sir.
Retail as well. So because the retail and telecom, they are giving a higher, valuation, basically. That's why
Yes,
it is
sir.
commanding a higher valuation because it is a conglomerate present about 6 kind of businesses, okay?
Right,
Not
sir.
only
Right,
oil
sir.
and business, but other also businesses. Almost roughly 50% of their revenue comes from different businesses.
Right, sir.
Okay.
And so obviously that advantage is not with other companies that we've taken up.
Hmm.
And but so one thing that I would like to point out in at the very end is the PG and EPS things. In that, MRPN and CPCL might look a little better off, but that is because of their fluctuating. So they are very volatile firms.
Hmm.
So whenever crude price goes up and down, their graph also fluctuates a lot. So
Yeah.
their as a result, their growth could be projected as pretty high.
और दूसरा क्या है रोहन, all these like HPCL, BPCL, IOCL, they are all oil marketing companies, okay? Fine.
Right, sir.
Whereas Reliance and Reliance particularly is not just a oil marketing, it is basically oil refining and oil exploration business. Okay, so the marketing businesses, they are basically valued much lower compared to the other businesses because they can't raise the petrol price, because
Right, sir.
and the petrol pump, they can't raise the price every now and then because of the political reasons. Okay,
Right,
so
sir.
because of that, their profits are always hampered. Okay, and the
Mm.
shareholders don't want to invest in these companies because they can't do the business they don't have much freedom to decide about the prices at which they are going to sell the petrol at the petrol pump. Okay,
Yes, sir.
so
So
that is
yes,
one
sir.
thing.
There,
So these all
there.
companies, IOCL, BPCL, they're all marketing companies of oil. Okay,
Right, sir.
so when
So
you're
they are
comparing
more.
two companies, they are not comparable as such. Okay, that's why they'll come on different valuation metrics. Okay,
Hmm, yes,
okay,
sir. So they are tied more closely towards crude prices and government interventions.
yeah.
And so,
ठीक है आगे चलो.
sir, ठीक है,
Let the
sir.
last
Next
one,
slide.
the जो रह गया वो present कर ले. कौन
So,
है? पवन.
yes, sir.
पवन, yeah.
It's a growth metric. This matrix really compares EPS growth rates alongside PEG ratios for each company. So PEG ratios generally indicate valuation. Reliance sits on top of it, reflecting its premium. MRPL and CPCL also have healthy growth, but trade at modest valuations, making them intriguing value growth picks. While ONGC and BPCL's very low PEG ratios suggest the market may be undervaluing their growth potential, and IOCL and HPCL and MRPL have moderate PEG ratios, aligning with their reasonable growth profiles. Uh, this table helps investors see who stands out for a growth and if their stocks are attractively valued or trading at a premium. It supports key decisions in portfolio construction and peer benchmarking. The next slide is recommendations.
Yeah.
So, based on our comprehensive sector analysis, factoring in market share, profitability, and valuation ratios, uh, Reliance earns a strong buy as it leads in market share, profitability, and growth outlook, justifying its premium valuation.
Mhm.
ONGC also receives a buy recommendation due to its stable upstream operations, strong EBITDA growth, and attractive valuations multiples. Then IOCL is rated as a whole because while it is a dominant downstream player, its growth is moderate and its valuations are stable. Then regulatory changes affecting refining margins warrant caution. BPCL is a hold or accumulate given its moderate downstream presence and valuations uh, that suggest a gradual, cautious approach pending further regulatory clarity. Then HPCL is a hold for investors seeking stability. It has a slower growth, but is backed by ONGC and suits defensive positioning. Then MRPL is a speculative buy. It shows a high EPS growth, but its earnings are volatile and valuation ratios warm of risk. Then CPCL is considered sell or underweight due to weak market share, negative earning ratios, and limited future growth, indicating likely underperformance. The next slide is of scatter plot of plotting the companies in the four dimensions. So this scatter plot generally visualizes or maps EPS growth rates on y-axis against PEG ratios on the x-axis. Uh, the top right, the top right quadrant shows high growth and high valuation featuring Reliance Industries. This indicates robust earnings expansion that the market is willing to pay a premium for. Then the top left quadrant with MRPL and CPCL highlights companies experiencing strong EPS growth but trading at relatively low valuations, potentially signaling undervalued opportunities. Then the bottom left quadrant contains ONGC and HPCL, which are considered value picks with more modest growth rates and how low market valuations. Notably, the bottom right quadrant is sparsely populated, meaning the most lower growth companies in the sector aren't assigned premium valuations. Uh, then come,
Okay, good. Thank you
I would
very
like
much.
to
The
come.
presentation was nice. Okay, so I'll just go through again. Just share the slides again to me. Okay, have you shared the slides on the Google Drive?
Yes, sir.
ठीक है, चलो. Thank you so much.
Thank you, sir.
So Ashwin,
Yes, sir.
अश्विन है और कितने लोग हैं?
So four of us: Ashwin, Shivam, Tejas, and Samya.
Okay, so what is the topic what you have chosen?
Just a second, I'll just share my screen. We have chosen the alcohol and alcohol beverage industry.
Okay, okay.
So is my screen visible?
Just a second. अभी